Welcome to my YouTube channel. This is Jet Li with you. Today I wanted to talk about three important topics. The first one is scalping really worth it? The second one would be, can I trade even if I have a 9-to-5 job? And the third one would be, let's say you have been trading for a couple of years and we've not really reached that level of consistency, you have not reached the profitability level yet, and you are almost on the verge of dropping the plan of trading and keeping that as one of your side business. Well, I have good news for you. Stay tuned until the end of the video and we will see if we can work this out for you. Point out the first problem faced with scalping. The most common problem that a new trader would face by scalping is basically he will have to keep on looking onto his laptop screen or computer screen, waiting for the signal provider to send a signal. Right? They usually send it during random part of the day depending on the trade setup that develops. So you can't really be sure when, at what particular time am I expecting him to. Most common time would be during the London or the New York session, or maybe during the overlap session, right? That's just basically a reference time that you can keep where it could most probably click. But it's not necessary it has to be that way. So most of the time you will have that fear of missing out and keep on looking onto your screen 24/7 waiting for the signal to come to you. Now let's say the signal came. Okay, so you're happy? Of course not. Now you will have to wait for the price to reach that particular level, and once it reaches that particular level you have to execute the trade. Are we done yet? No, we're still not done. What is our next job is basically once it reaches that particular level you execute the trade. Now we are in the trade. Now all we do is wish, hope and pray for the price to reach that particular take profit target. And that time it's quite stressful. So this is with scalpers. You will have to be on top of your toes for every candle by candle for as the price keeps moving. Now, you know that trading is not that difficult. You don't of course there are certain key components that you have to look out for, but as a whole it does not have to be that stressful. End of the day, it's only probabilities. We are not market makers or big banks or hedge funds or anything of that sort. We are just retail traders trying to take a message from the market and then execute the trade. That's it. Okay, so like I said about scalpers, you will have to be glued to your screen waiting for the price to reach your take profit target. So what does it mean now? So basically you're hooked to your computer screen 24/7. Now what does it mean now? So you left your 9-to-5 job. Instead of sitting in the office, you're coming home and sitting, and you're employed in front of the screen for a 24-hour job. Yeah? So, isn't that crazy? Just think about it, isn't that crazy? You leave your job from that 9-to-5 job just to come home, sit in front of the screen for 24 hours, waiting for the price to move candle by candle. What difference does it make? Doesn't really make sense, right? Now, another issue is, do you personally think it's sustainable in the long run? Let's say you have $1 million account. Okay, all your hard-earned money, you put it up, and you put it up for your trading account, and you sign up with a signal provider who says my strategy is 99% accurate. With all that proof and data that they show you, and you sign up for it, you wait for the signal shows up, and you enter the trade. So that 99% profitable strategy, we use the trade setup that they send you. What if that particular trade was part of the 1%? Imagine the couple of $1,000 that you lose with just risking on that one particular trade. This is called gambling, right? So basically you put all your money into it, hoping that it's going to double, because they claim it's a 99% win rate strategy. You still have that 1%, and if that 1% plays out, you're out of the game. So take trading as a long-term commitment. It's not a get-rich-quick scheme, and you don't really have to put in all your risk in just one trade. The best approach would be you risk 1 to 2% per trade. Everybody says the same thing, but end of the day, once you start getting the feel of it, greed kicks in and you start putting more and more. And then once you lose one trade, then you start revenge trading, trying to get it back, and this just becomes a vicious cycle and you end up losing. And end of the day, you blame it, saying trading is not for me, it's too difficult, it has a lot of complicated charts, it has a lot of indicators, it has a lot of support and resistance lines. It's not like that. But let me tell you one thing. If you use the proper risk management and the proper strategy, a back-tested strategy, right? Not some random guy telling you, well, my strategy works so and so. You need to back-test that strategy and see if it really works according to your personality. Not every strategy is fit for everybody. But what I want to say is, if you take trading like a business and you are really serious about it, it would get you to levels where you can't even imagine. It has that much of potential. It's just that, people are just greedy, they don't use proper risk management. There's a popular saying which says 90% of the traders lose 90% of the money in 90 days. There is a reason why that particular quote is been told. Okay, another thing what people say is, well, I have a 9-to-5 job and it's really difficult for me to keep focusing on the computer screen 24/7. Once I get a trade signal, I enter the trade and I'm not able to concentrate on my work, plus I am not able to fully focus on the trade. Guys, let me tell you one thing. You've heard of the quote, sky is the limit, but that was long back. We have footprints on the moon. So now, what if I showed you something where you do not have to be glued in front of the computer screen 24/7? That's one thing. And you don't have to wish, hope or pray for a particular trade to happen. That's number 2. And even if you lose, you're okay with it, provided you have proper risk management. And another thing is, what if all you have to do is check your charts 3 times a day? One in the morning, one during your lunch break, and one before you go to bed. Just 3 times a day that you have to check your charts, and you can still become profitable. You do not have to take X number of trades every day to make money. You can still make money by taking the few number of trades and avoid taking low quality or poor quality trades. Okay, so for the one which I'm about to show you, all you have to do is just wait for the pattern to form. See, like in the morning you wake up, open your computer screen, look for the pattern that you are forecasting. Has it formed? Yes, you place the entry order and you forget about it. Okay, now let's say it did not form, it's still on the way of forming. So all you do is just wait, keep it aside. You do not have to wait, check every 15 minutes or 5 minutes or 10 minutes or 1 minute. You just, next time you check it would be during your lunch break. So during the lunch break, you open up again and you look for the pattern. Has it formed? If yes, you take it. Okay, all you do is place your entry order with stop loss and take profit targets, and that's it. You forget about it. Evening when you get home, you just check your charts, and it can only do 2 things. Either it can take you out for a stop, or it can go on your profit. But by trading patterns, patterns has been repeated historically over and over again. So even if one time it fails, the probability is higher that it will work your way out. So all you need to do is just risk 1 to 2% per trade. If it takes you out, it's fine. But if you are in the trade, the amount of the risk to reward ratio is quite high, and your strike rate is 80 to 90%. I'm not saying that it's 99% or 100%. There is no strategy which is 100% profitable. 80 to 99% of the time, with a good risk to reward, let's say 1:3 is the minimum that you focus. Let me show you the trades that I have taken yesterday, which is the 21st of August 2020, which was a Friday. Another thing is, people say do not trade on Mondays and Fridays because the market is quite chaotic and all that, but if you trade support or resistance, or what do you say, the lagging indicators, MACD or RSI, I have used indicators, and trust me, it's quite overwhelming, and they all just cover up your price pattern. I mean, the basic thing is your candlesticks and the price action. If you put all sort of clutter on it, it's just going to confuse you and make things look really complicated. I mean, that's not fun. And the cleanest way is basically to trade the patterns, wait for the pattern to form. If it's a reversal pattern, you enter the reversal. If it's a continuation pattern, you just continue the trend. That's it. And the best part of it is definitely it's with the trend. And another very important part is you can spot the change in trend well in advance.
Okay guys, so like I said, this is my TradingView account. Feel free to follow me. My account ID is jetly232. Well, the trades that I called, I do post a lot of trade setups for free. The trades that I called yesterday, which was the 21st of August 2020, which was a Friday, I said the pattern was a bear flag, so the direction is probability is a sell setup. And all I did was, in the morning I just woke up, I saw the pattern forming, which is a bear flag, and I just placed an entry here, stop loss on top of it with a 1:3% risk to reward. And let's see how it played out. So as you see, it had played out exactly how we wanted it. Well, this was during the close of the market hours. So what I did is I was trailing the stop, but then I just felt, well, it would be a good idea for me to close the trade in profit, and I ended up closing the trade for 2.58%, which is 185 pip. This is just on one trade. And the second trade I called was GBP CAD. I said it's forming a rising wedge pattern, and all I did was, this was in the morning hours, so let's say around 7:30 or 8 Indian time. I formed this as a rising wedge pattern. All I did was place the entry here with a stop loss on top, 1:2.7. Yeah, 1:2%. And all I did was just place it and then forget about it. I did not even look back to it. All I checked was in the afternoon if I got triggered or not. And there you go. So by evening, once I got home, I got tagged out for a profit of 110 pips, which is about 2% of how much I have risked. So this is what I pretty much did, and I called it TP target hit a total of 110 pips. So all I did was just look for the pattern, place the entry here, and then forget about it. I do not have, I don't have any support resistance, or I don't have any sort of indicators on the chart. Trading is simple that way. You don't have to confuse yourself, and you will not even feel like looking into the chart if it's cluttered with a lot of things.
Okay, so like you've seen, all I did was wait for the pattern to form, place my entry order, and just forget about it. It's like set and forget order, right? And if you notice, my risk is minimum and the reward is higher. So the minimum that I would look for is 1:3. Sometimes I do it 1:2, but depending if the trade is really good. And that's all. I mean, it doesn't have to be that stressful. Trading is not stressful. It's just that you need to know certain things in it, so to make it a lot more enjoyable. And it's fun. Once you start seeing it playing the way how you forecasted it, it's really fun. So I have 3 important golden rules for you to keep in mind if you consider getting into trading. The first one is trading is definitely not a get rich quick scheme. If at all somebody approaches you saying you can make X number of dollars in a week or a month time, please stay away from it. Might as well give that money to charity, donate it to somebody else. Yeah. The second one would be proper risk management. Imagine you have 100,000, or maybe let's forget 100,000. Imagine you have a $1,000 account. You risk maximum of 1 to 2% per trade. So how many you can calculate it by yourself, how many number of times that you have to hit your stop loss to blow your account. If your minimum risk to reward is 1:2, I would advise you to go for 1:3, but let's say your minimum risk to reward is 1:2. If you end up blowing that account, it means your strategy is bullshit, it's not working. So that's why another thing you have to keep in mind is you need to backtest your strategy and see if it really works or not. And only then you demo trade it for about 1 to 2 months, solid demo trading. Once you start seeing the profitability, then you go live trading. And in order to be profitable, you don't really have to literally stick yourself in front of the computer 24/7. Do not get a life life is quite beautiful and you can always enjoy it. I mean, all you have to do is, just because you took trading as a side business does not mean you have to be in front of the screen every time. You just place your orders and forget it. Just leave it. Let the trade do what it wants to do. Because remember what I told you in the beginning, we are not market makers. So all we do is we take message from the market and we trade it. That's it. Yeah. So there is always a chance for the trade to go against you. You cannot force 2 dice to fall into number 6 every time you throw it, isn't it? Just keep that in mind. And I'm not really a big fan of all sort of fancy lagging indicators and all that. And plus, I don't really use support or resistance. Just stick to the basic patterns and you should be good. So to conclude, one of the questions that I asked was, is it possible to trade when I have a 9-to-5 job? Of course you can. You do not have to let everything one side and then you go focus completely on trading. What if trading doesn't work for you? You're screwed, right? Then the second thing would be, is scalping profitable in the long run? Definitely no. It is not profitable. Because imagine you invest your $1 million account and that 1% which I told you plays out, you're done for the day. Don't get me wrong, there are people who are making a good amount of money with scalping, but that doesn't mean it has to work for everybody. It depends. Trading depends on the person's personality. If he's really an aggressive guy, then of course scalping is the way for him. But if you are somebody who is working a 9-to-5 job and you really want to have an extra source of income, definitely scalping is not your way. Because one loss could just shatter your dream over there. I mean, this is what I have found, and I have seen people literally lose. You can just YouTube it, seen a few videos where people literally break down once they see their trades close and negatives. And so let me know in the comment section below about what are your thoughts about trading and how has been your experience so far and what sort of a trader you are. I mean, it's nice to know the number of traders we have. Do we have a lot of scalpers, or do we have a lot of day traders? Do we have a lot of swing traders, etc. If you guys found value in the content, please subscribe to my channel and hit the like button. so that this would give me an idea that people are enjoying it, and this would give me more motivation to put in more valuable videos